Many people think vehicle-related tax deductions are only for business owners or freelancers. But in some cases, you might be able to write off car costs even if you don't use your car for work. Here are 8 types of car expenses that may qualify as tax write-offs. If your medical and dental expenses exceed 7.5% of your adjusted gross income, you might be able to deduct some of the costs of driving to appointments. This includes tolls, parking, gas, oil, or a standard mileage deduction of 21 cents per mile. The expenses must be for necessary care and not reimbursed by insurance. If you or someone in your household has a chronic illness and you travel to a medical conference related to that illness, you could deduct travel costs for driving to the event. This doesn't include meals or lodging. As with medical appointments, you can either deduct actual vehicle expenses or use the standard mileage rate. When you use your car to volunteer with a qualified 501c3 charity, you may be able to deduct expenses such as gas or mileage. To qualify, most of your trip should involve charitable work rather than leisure activities. You can use either the actual cost of gas or the standard charitable mileage rate, which is 14 cents per mile. Some workers can deduct travel expenses for continuing education, but only under certain conditions. The education must be required to maintain your current job or improve your skills. This is typically available to self-employed individuals, reservists, some government employees, and qualified performing artists. You can't claim the deduction if the education leads to a new career. If you bought a new plug-in electric or fuel cell vehicle in 2023, 2024, or 2025, you might qualify for a federal tax credit of up to $7,500. Buyers of used EVs may be eligible for up to $4,000. Eligibility depends on factors like your income and whether you received qualifying documentation from the seller at the time of purchase. Donating your car to a qualified charity could result in a deduction. If the organization keeps the car or gives it to someone in need, you can deduct its fair market value. If the charity sells the vehicle, your deduction depends on the sale price. If the car sells for under $500, you can typically deduct up to $500 or the car's fair market value, whichever is less. If you install vehicle modifications like hand controls, ramps, or lifts for yourself, or someone in your household with a disability, you might be able to deduct the cost as a medical expense. You'll need to prove medical necessity, which usually includes a doctor's note and documentation. If your car is damaged or destroyed in a federally declared disaster, you may be able to deduct the loss, especially if it wasn't covered by insurance. If you did have coverage, only the unreimbursed portion of the loss would qualify for a deduction. Car-related tax deductions aren't just for business use. Depending on your situation, you might be able to deduct costs for medical travel, charitable work, or even disaster damage. A tax professional can help you figure out what applies.